Joining us now is Ellen Hazen, Portfolio Manager at FL Putnam Investment Management. Ellen, great to have you with us. I want to get your take, Ellen, on Adobe's quarter. I mean, a lot of investors would be grateful for 15%, 14% revenue growth, which is what Adobe posted, but yet that number is decelerating. So what should you pay for a company whose revenue growth is decelerating, given that it's trading already at a premium to its peers?
Thanks, Melissa. Adobe had a fabulous quarter. And there's no question that the digital transformation of so many companies has been very much accelerated by the pandemic. And so you see small, medium businesses, you see individual entrepreneurs, prosumers, as well as large companies increasingly moving to online. And so you did see Adobe have even faster growth a couple of quarters ago. It's decelerated from over 20% down to 15%. But some of that was pull forward. So I don't know how much we should consider the deceleration. For 15% revenue growth, particularly if it's projected for the next several years, which this is, and importantly, with a company who generates free cash flow far above earnings, it makes sense to pay at least 1.5 times the market multiple. So Adobe is trading at about 35 times 2 years out earnings. But if you look at it on a free cash flow basis, which is so much better than looking at it on an earnings basis, it's about 25 times, which is very fair for a company able to grow revenue double digits.
Want to get to your two other picks, which have benefited during the pandemic. Home Depot is one, Ellen, and I'm wondering how much pull forward, you mentioned pull forward, there is in Home Depot, in that if you're at home and you're looking around and you do home improvement and you regrout your shower, you redo the kitchen floor, you're not going to do that again for quite some time. So how do you see that business and the pace of business for the rest of the year?
Home Depot had an unbelievably good quarter. That was the July quarter, of course, for retailers that are on the July quarter calendar. Comps were 23%, which is unheard of in the home space. And yes, there have been people increasingly turning to nesting and improving their home. But what was interesting about Home Depot is that you saw the strength across the board. It was in outdoor, it was in indoor, it was in kitchen, it was in everything. And so there's reason to believe that it may sustain. One of the concerns about Home Depot is whether or not we are going to see demand fall off a little bit with the stopping of the extra unemployment insurance. So that's something that we're watching on Home Depot. But on the positive side, you have so many other drivers. You have very low interest rates. You saw phenomenal numbers out of Lennar yesterday. The home builders are doing very well.
Sure.
And so even though we have seen this little bump from people staying home and improving their homes, we think that that can last quite a bit longer when you see the strength in the rest of the home builders.